So some of the work I do is I model the price of Bitcoin. I also predict the price of where it's going.
This is the single most important topic within Bitcoin that has only just begun to be.
There's a highly respected Bitcoin analyst named Willy Woo who has earned serious credibility in the crypto world. He has been in this space for many years and has supported Bitcoin long before it became mainstream. For more than a decade, he consistently spoke with confidence about Bitcoin's future. Back when most people were doubting it, he was already encouraging others to buy. When prices were extremely low and fear was everywhere, he stayed firm in his belief. While the majority ignored Bitcoin, he kept reminding people of its potential. In a recent thread he shared yesterday on X, he broke down his view on what is happening right now. He explained why Bitcoin is falling in price. He believes the drop is not random or temporary. According to him, the market could continue to slide even further. The main reason he pointed to is the growing fear around quantum computing. He warned that this looming technological threat is starting to shake investor confidence.
And I think some of the sell-off right now is actually OGs starting to...
Let's break down this thread step by step. First, we need to look at Willy Woo's history and how accurate he has been over the years. His past calls matter because they tell us whether we should take this warning seriously. At the same time, Michael Saylor also addressed the quantum computing concern during his latest earnings call. I'll walk you through what he said as well. Now let's focus on what Willy posted yesterday. He claimed that a 12-year trend has officially been broken. According to him, Bitcoin should be valued much higher compared to gold. He emphasized the word should, because in reality, that is not what the market is showing right now. He believes the long-term valuation trend started to collapse once quantum computing became a serious topic of discussion. He even warned people not to read his post if they prefer comfort over hard truth. He suggested that some investors would rather stay optimistic than face potential risks. The chart he shared compares Bitcoin, or S, price to gold, S price over more than a decade. In that chart, Bitcoin is shown in blue while gold is shown in purple. This is not gold measured against the US dollar. This is gold's performance directly compared to Bitcoin. For years, gold has been losing value against Bitcoin. Bitcoin clearly outperformed gold over that long stretch of time. But then something changed. There was a strong 12-year trend line that had held steady. This year, gold finally pushed above that trend line. That move officially broke the long-standing pattern. Willy points out that the shift actually began earlier. He traces it back to when quantum computing was first mentioned on the Bitcoin Core developers' mailing list. That was when the conversation started to get serious. Then, toward the end of last year, the so-called Quantum Bitcoin Summit took place. And according to him, that is when the long-term trend truly broke.
Its underlying properties is that, but it's not recognized as one because it trades risk on currently because it's too small, it's too young, and it needs to get to a certain market cap similar to gold. It needs to get older because it's only 16, 17 years old, and that's nothing compared to, 6,000 years of gold, 10,000.
Willy makes it clear that quantum computing is not going to destroy Bitcoin. He explains that Bitcoin can be upgraded. Most likely, BTC will adopt quantum-resistant signatures to protect against these new threats. But there's a big catch. This upgrade won IT solve the problem of the roughly 4 million lost Bitcoins coming back into circulation. Those coins are lost because the owners don't have the private keys needed to upgrade them. Willy estimates there's about a 75% chance that these lost coins will not be frozen through a protocol hard fork. For anyone new to Bitcoin who wants to understand this deeply, he has an 11-minute video breaking down how quantum computing impacts Bitcoin. It's a solid, beginner-friendly guide explaining exactly which parts of Bitcoin are vulnerable. He highly recommends watching it to gain a full understanding of the risks. So what does this mean in practice? For everyday holders like you and me, who self-custody our Bitcoin, the upgrade should be fine. Even someone like Michael Saylor circulation needs to be factored into Bitcoin's price today. To put it into perspective, since Michael Saylor...
The asset class itself is going to be wrecked.
The number one way to protect yourself from quantum computing threats is simple. Hold your own coins. Keep them in cold storage so you have full control. This also gives you the option to make your coins quantum upgradable in the future. Personally, I use a Ledger wallet for this. Ledger provides a very secure way to store and manage all your digital assets. Right now, there's even a special promotion for a limited time. If you sign up with Ledger, you can receive free Bitcoin as a gift to help build your portfolio. Whether you use the Ledger Flex or the Ledger Nano Gen 5, you get bonus Bitcoin when you start self-custody. The key takeaway here is that coins you fully control are likely to be quantum upgradable. This is only a limited time opportunity, so it's important to act quickly if you want to participate. Now, here's where Willy Woo is right and where he might be wrong. Michael Saylor.
The top, so I'll put the target here within these. This is December, and so we can kind of guess within there. This is 200,000 to 300,000, 100,000.
So the reality is that Willy isn't always 100% correct. I'm not always right either, and nobody truly is. I also don't fully agree with his idea that correlation equals causation. Quantum computing didn't suddenly appear on the Bitcoin core developers' radar last year. It's been a topic of discussion in the community for over a decade. That is why I made a video about it last year, to explain the risks and what it could mean for Bitcoin. The core point here is simple. Nobody is seriously claiming that quantum computing will outright destroy Bitcoin. Willy's argument focuses on the roughly 4 million lost Bitcoins. These are coins that are unclaimed and could, in theory, be accessed and potentially sold if quantum breakthroughs happen. According to his calculations, 4 million lost coins represent about 8 years' worth of institutional accumulation. Even though institutions haven't been buying Bitcoin for 8 full years, the market is already factoring in this potential risk. If quantum computing casts a shadow over Bitcoin for the next 5, 10, or even 15 years, that uncertainty is being priced in today. This means anyone holding Bitcoin is being compensated for taking on that risk. In other words, it has made Bitcoin a riskier but potentially more rewarding investment. For those willing to take on the risk, Bitcoin is effectively cheaper than it might otherwise be. Some investors are cautious, and the market reflects that hesitation in the price. Meanwhile, Michael Saylor, MicroStrategy CEO, just announced that MicroStrategy will launch a global effort to make Bitcoin quantum resistant. This is a proactive step to secure Bitcoin against future threats.
We are going to initiate a Bitcoin security program that coordinates with the global cybersecurity community, the global crypto security community, and the global Bitcoin security committee in order to help and contribute to consensus and solutions to address the quantum computing threat, as well as any other emergent security threats that evolve. We think it's reasonable and appropriate for us to do this, given our large responsibility.
What this means is that Bitcoin will eventually need an upgrade to handle quantum threats. Michael Saylor.